Hey, welcome back, everybody. So today I'm going to be talking about a strategy that I believe can greatly outperform even cryptocurrency. Now, before I begin, I want to just make sure that I preface this by telling you that I am actually quite bullish on crypto. I have my own portfolio of Bitcoin, Ethereum, Sol, Cardano, all that. So, I'm not against cryptocurrency, but in the last couple, months, I've just really been digging deep into options and into the stock market even more. And there's a strategy that I am confident can outperform even cryptocurrency. Now, before I begin, and before you start hating me, if you are a crypto lover, make sure you like and subscribe, and please be patient with me as I try and do my best to explain to you my process and thinking the way I think. Okay, so first off, again, I am not against crypto. As I told you, I have crypto myself, but the reason why I believe there's a better strategy than crypto is because of this strategy, and that is the LEAPS strategy in the stock market. Okay, so LEAPS, if you don't know what it is, it's a long term anticipated equity contract. And basically, what it is I'll try and remove the fluff. Okay, so you're buying an option, and if you don't know what option is, I will provide a link for you to find out more, or you can just YouTube yourself and learn more about options. So this is not for someone who's just beginning to learn about options. Okay, but it's basically an option that is way in the money and at least a year out. Okay, so I want to show you exactly what it looks like. So let's say I am bullish on, I don't know, let's just say, uh, Tesla. Okay, so I'm going to type in Tesla, and I'm going to go to trade options. The way I would execute a leap option is I would go way out into at least a year or more. Okay, so in this case, I'm going to set my expiration date to January 2023. And I'm going to go deep in the money, which is below the share's stock price. Okay, so you want to find a delta that is basically, let me see here, that is basically over, I would say, 0.8. Okay, so delta, which is part of the Greek system, just basically tells you the probability of this option profiting. Okay, and also gives you an idea of how much the option would move in relation to the stock. So let's say if Tesla goes up $1, then your contract that has a delta of 0.81 will go up by 0.81 cents. Okay, and then vice versa. If it goes down by $1, then it will go down by 0.81 cents. Okay, you have your theta, which just tells you how quickly the decay is. So every option contract has a decay, which means that it loses value over time. And theta basically just tells you how much money it's losing every day. Okay, so the higher the theta, the more money you're losing. In this case, the theta on this particular contract is extremely low at 0.12. Okay, so basically the idea is, okay, you're going to bet that in 2 years. Okay, so on January 2023. Okay, so maybe like 1.5 years. Okay, Tesla is not going to drop down below a certain price. Okay, so if we're looking at contracts, it'll actually even tell you on Robinhood, and this is the reason why I love Robinhood. I'll include a link for you to sign up, is because they make it so easy for you to figure out so many things. Okay, so on one hand, you'll find the open interest volume. Okay, so you'll know how many contracts are being exchanged. I'll tell you all the Greeks, so the delta, the theta, the gamma, everything you need to know. Okay, and then my favorite part about Robinhood is it actually tells you how much it needs to move to break even. Okay, so let's say you're buying this LEAP contract of 490 expiring January 2023. I'll tell you that Tesla needs to move up 7.89% in order for you to break even. Okay, so you'll know exactly how much Tesla needs to move up for you to break even and start making money. Okay, now let's say you go even further down the line. Okay, now a lot of times I actually buy contracts that have a delta of at least 0.9 or above, which basically means that the probability of making money on this particular contract is 90%. Okay, 90% is pretty high. And all Tesla has to do is go up by 4.36% in 1.5 years. Okay, and you're making money. And anything after that, you're making even more money. Okay, so it's a really, I think it's a really safe strategy. You don't have to buy low, try and sell high. You don't have to continually monitor the market. You really just have to find a stock that you're bullish on, and don't just don't buy a contract in Tesla unless you really believe that Tesla is going to go up. Honestly, right now I'm I don't have a particular stance on Tesla. I am bullish, but it is a pretty volatile market, volatile stock. So this is just really for informational purposes. Okay, so don't trade this stock unless you have a high conviction that Tesla is going to go up. Okay, and now, okay, so back to what I was saying. The probability of this is so high, and the chances of profit is really unlimited. Like, so after it goes up 3.73%, whatever after that is your profit. And one thing to know about leave options too is you can sell really at any time. So you don't have to wait until January 2023 to profit. Let's say Tesla jumps $900 to $900 in like a month. You can sell like in a month. You don't have to wait 1.5 years for you to sell. Okay, so that's basically how a leap option works. Now you're probably asking the question, okay, so Daniel, like, how does that outperform a leap option? Okay, like, especially when you have Cardano, when you have Ethereum, when you have Sol, that a lot of people have been predicting that it's going to go up. It's going to go up 2 times, 3 times. I think the most popular sentiment I've been hearing is that most of these, like Bitcoin, Ethereum, even these altcoins, are going to 2x your money, right? At this point, from this day on, it's going to 2x your money, and that's great. Like, I believe it's it's great to research into all these different cryptocurrencies and how they work and all that. And I think the potential of 2x is, I think it's definitely very possible. But here is my thesis of why I believe if you exercise this strategy, it could be a lot better than cryptocurrency. Okay, so let's dive deep into it. Okay, so first I had to establish what a leap option is. And at the end of this video, I'm actually going to show you 3 leap options that are cheap. Okay, so you don't have to have a lot of money. Maybe you're like, oh no, I don't have $440 per contract, or per share on this contract, right? And that's something that I totally understand. I don't think most people can afford $4,000 to execute this contract, but I have a couple companies that I have quite a few companies that I've been buying leaps on that are actually relatively cheap. But before I get into that, I want to show you a really interesting play with leap options. Okay, so right now, let's say you don't have a whole lot of money and just extra money to spend, which is fine, right? That's not a problem. I think it's important to invest money into other things like your family, nonprofits, just giving to those that are in need. Okay, but a really interesting strategy with leaps is, even if you don't have a lot of money, if you open up an account called the interactive brokers. Okay, so there's a brokerage account called Interactive Brokers. The reason why I like interactive brokers is because they actually allow you to buy from overseas markets. But the best thing about interactive brokers is they have something called a margin account. Okay, so one thing to know about LEAPS is essentially it allows you to buy a stock that you're bullish on at about half of what you would pay for to buy 100 shares outright. Okay, so it's almost like you're doubling your firepower. Let's say you're bullish on Tesla, but instead of buying 100 shares of Tesla, you're able to actually buy two or even a little more than two LEAP contracts that is essentially gives you the same power as 200 shares. Now, if for some reason Tesla trades below, the few percentages that you need Tesla to go up in order for your LEAP contract to profit, then yes, like you're going to lose the entire premium. But that's why you really want to, number one, diversify. Number two, you really want to find a stock that you are just really, really confident that will be up in 2 years. And I think that's not really hard. Of course, we can never predict the market, but in general, if you give something 2 years, if you give a company your stock 2 years, generally speaking, it's going to go up in 2 years. Okay, so now, with that in mind, one thing that is even more interesting, okay, beyond, increasing your firepower 2 times, is if you look at the idea of trading on margin. Okay, now this is not something that I would particularly recommend for anyone who, like you want to make sure you have enough savings to care for your family and all that. You just want to make sure you are financially, just make sure you have at least 6 months of savings. You don't want to do anything too wild. But I just want to simply present the idea, okay, that if you open up an account with Interactive Brokers, they actually allow you to loan 50% of the value of a stock or position, okay? On top of that, the margin rate is actually one of the lowest that I've seen. Okay, so there's a lot of brokerages that offer margins, at like 7%, even 8-9%. But if you look at Interactive Brokers, their margin is extremely low. So let's say you have less than $100,000 invested. The margin rate on that is 1.58%. Okay, that 1.58%, that is extremely low. That is almost like the current home loans, right? If not even lower. And if you have more than $100,000, then your rate goes down to 1.08%. Okay, so that is really, really low. And of course, if you have over $1 million, then it's down to 0.75%. But what I think that's really interesting because, okay, if you think about LEAPS options, right? LEAPS options already gives you a double the firepower. Okay, now if you consider margins, right? Let's say you have a portfolio right now of I don't know, like $20,000, right? On margin, if you're able to borrow, 50%, like on paper at least, you're able to have the firepower of $30,000. And if you consider doing LEAPS, which already doubles your firepower, it's almost like you have the same firepower of investing in $60,000 worth of stock, right? Instead of buying outright $6,000 worth of stock, you use margins, you buy LEAPS, and with your $20,000, you are on paper invested $60,000 into a company. Okay, so that's not even the best part. The best part is, after you've three times your money, right? So you're talking about like, crypto doubling. This is tripling your money without even doing anything. You haven't even invested in a single stock, but you've effectively tripled your firepower in investing in stocks. Right now, there are risks, of course. Again, like I mentioned, if in 2 years the company for some reason doesn't go up just even a little bit, then yes, you lose your premium. But the chances of that is so low that I think it really outweighs the risk, especially like if you're invested in cryptocurrency. I think this outweighs the risk, and not only that, let me show you the upside. Okay, so let's say on March 2020 when the coronavirus hit, if you had invested into just like an ETF that tracks, the market, something like like SPY or QQQ. Well, let's just take SPY for example. If you had invested 100 shares into SPY, or even one share, whatever shares, if you had invested in SPY in 2020, by today, you would be up about 30%. But let's say you had bought a LEAP option. Okay, LEAP options amplify your returns, meaning that the stock goes up. You're gonna make a lot more money on a LEAP option than if you were just to buy the stock outright. So if you had bought SPY on a LEAP option in March, or it actually can be like you wouldn't have even had to time your purchase, right? If you had bought it in April, May, June, July, but I'm just looking at March, right? For the sake of comparing between shares and LEAP contracts. The LEAP contract on SPY would have given you a 600% gain, right? That is insane, right? That is like 20 times the money you would have earned if had you just bought the shares outright. And so that's really interesting because if you think about it, right, you're already three times 3xing your money, right? You tripled your money, and now you're creating an upside that is much, much higher than if you were just to buy the stock itself. So the gain potential is truly unlimited if you go with a sleep option strategy. And like that's one of the things that I think you can either do more research on, and or just really look into it yourself. But that's something that I'm looking at myself, and not only that, I've been really investing a lot more into it. And I'm actually going to show you right now. So maybe you're considering the idea, you like the prospect. You're like, okay, if this actually works out, great. But I don't have like that much money to invest in like a bunch of LEAP options. Well, let me show you today just three companies that I'm invested in myself on a LEAP option, and let me show you how much you would have to pay today to buy that LEAP option. Okay, so the first company I'm going to be taking a look at is called Barclays. Okay, so many of you have heard of Barclays. It's a multinational universal bank headquartered in London, England. Operates two divisions. Just some fundamentals on a stock. Right now, it's trading at a really low PE ratio of 6.95. There's a huge market cap of $42 billion, and if you look at the past year performance, it's been going up steadily, right? It's been trading pretty steadily, so it's one that I think is pretty safe to say in 2 years is not going to go below a certain percentage. And then not only that, in 2 years I'm pretty sure this particular stock and company is going to be up. Okay, so let's look at how we would trade the sleep option for Barclays. So if we go to our our Robinhood, and we type in BCS, okay, so we would do trade options. We would first set the expiration out to January 2023. We're going to buy a call deep in the money. So let's start just taking a look, right? And one thing I have realized while I've been buying LEAP options is you can get some really good deals, right? You really have to pay attention to how much the premium is that you're paying for versus how much the upside would require for you to make a profit. So I'm going to actually take you through just how I would shop around. So let's take a look first at the $4 strike price. Okay, it has, okay, well, it's not showing the deltas right now because I think the market's closed. But okay, so if we bought at the $4 strike price, hypothetically, right, to break even, you would only need the stock to actually go down. So it just can't go down by more than 0.9%. So if the stock is up 1% in 2 years, you're basically starting to make money, right? And the premium you would pay is $6 per share, which is essentially, effectively, $600 for the sleep option, which in my opinion is pretty affordable. Now, so let's say your risk tolerance is a little higher, just a little higher, right? Let's say, and actually, I already just saw a mistake, right? Like if you look at the next one up, $5, now this could be a little off because again the market is closed right now, but if this stock goes down 8%, I'm still making money, in 2 years, right? And you're paying a premium of $400. Right now, I'm sure this is gonna probably adjust a little bit once the market opens, but you shop around for just really good deals, and oftentimes you can find really great deals where you would limit your risk, right? You would say, okay, like the stock only has to go up 1%, and I'm only paying $420 for this premium, right? And that's something that I think is pretty affordable, $400. If your risk tolerance is higher, let's say you just think that you just want the stock to go up by, you think the stock's going to go up by at least 10%, right? In 2 years, that's pretty safe, I think, still to say that a stock's going to go up 10% in 2 years. You're paying $100 for that contract, right? $1.08 per share, so that's about $108 for a contract, and that to me is really affordable. And let's say your risk is even higher, right? Once you move up to like $15, then the break even, the stock would have to move 52%, which is not that ridiculous, right? A lot of companies have moved up, like over that amount in just last year. You would be paying $35 on that contract. So this is definitely really affordable, right? $35 is nothing. Like, in fact, I'm actually even thinking about just executing some of those contracts just because it's so cheap, right? Let's say the stock it does go up quite a bit. I would not mind paying $35 and losing that, even if it doesn't go up, 52%. Okay, so that's Barclays. The other stock I'm looking at right now is stock ticker SBLK. Okay, SBLK is it's basically a shipping shipping company based off in Greece. They have right now a PE ratio of 10.81. They do pay a pretty high dividend. Their market cap is 2.33 billion. It's a really big company. They, let me just get straight to the point. They are printing cash, right? Especially after COVID, there's going to be a lot of demand for, shipping, and especially, shipping through sea. By sea, there's just so many trades right now that require shipping by boat, and so this is a really established company that has, look at it, they're paying 12.3% dividends. That means they are making a ton of money if they're able to offer such a high dividend rate. They actually just paid a dividend yesterday, okay, or 2 days ago, so their stock actually went down, and that's when I found a buying opportunity for this stock, especially with the LEAP option. Okay, so let's go back to the LEAP option. We're going to take a look at the options, and we're going to set the expiration to January 2023. Okay, so over here, right here, we already see some calls, right? Like this is actually the one I got yesterday. $15. You're going to pay $800 for a contract, and the stock has to go up 1% in 2 years, right? 1% in 2 years, you're making a profit. Let's say it moves up 10% in 1 year. You can sell that contract and make a profit, right? And your profits really are amplified. There's one more company I want to take a look at. It's a lot smaller. It's a natural gas liquids company. It's organized in Delaware and headquartered in Spring, Texas. It is actually ranked 776 on the Fortune 500. Okay, so if you the stock is a cheap stock, but it's a huge company, right? They make $2.3 billion in revenue. They have 900 employees. They have about $5 billion in assets. It was founded in 1929. Let's take a look at the LEAP options for this particular stock. Okay, so SWN. Okay, so if we go down and we set the expiration date to January 2023, okay, we're going to go down. We're going to look at what options we got. Okay, so right here, right, 0.5. So, if we open this up, so the stock would essentially have to move 4% for you to make a profit. The premium you would pay today is $485, right? If your risk tolerance is a little higher, let's take a look. Okay, yeah, so sometimes, there's some of these, like, you really have to play around with it. Like, I'm even seeing a $2.5 option right now where the stock has to go up 6%, and you're paying less than $300 on the contract, right? You can shop around, $2, you're paying, it has to go up 5%, and you're paying $340. I would probably just go with a 2.5 or the $2 option, right? And that just gives you quite a bit of upside without having to move the stock that much. Okay, and then plus the premium is pretty low. So let's say you buy like 4 or 5 contracts of these, right? You pay $1,000, and within a year it goes up 20%, or it goes up 10%. You can sell some of your contracts. You can sell 2 or 3 of your contracts and leave 2 more to run, right? And that's precisely what I'm going to be doing, just buying multiple contracts if you can afford it, right? And especially if you plan on selling some, if you plan on letting some run. There's just so many things you can do with LEAPS. Again, guys, if you like this content, if you want me to make some more, make sure you give me a like and just press that like button and subscribe. I would really, really appreciate that. If you have any questions, let me know. Let me know what LEAP options you're interested in. I would love to help out. Until next time, I'll see you then.